Welcome to the For Investors podcast where Wall Street meets Main Street. I'm Andrew Gay, along with Gilbert Pies and Zachary Green, and we are the Texas Hill Country Advisors, independent financial advisors based here in the beautiful Texas Hill Country in Kerrville, Texas. We're going to talk to you a little bit about the markets today. We have a couple of ideas we're going to throw at you too about how you can spend some time with your family this holiday season in a possibly productive way. Holiday season is known for lighter volume in financial markets, so that usually leads to a little bit of heightened volatility. But if you've been listening to our podcast over the last few months, the word volatility is not new to you.
We certainly had a few down days over the past week, but the last 2 days have been relatively decent for the market across the board. It's been relatively decent even for bonds, which is interesting. Both the bond market and the equity markets have been going up. Who knows? As you say, Andrew, it's volatility, and we may be surprised and get a little Santa Claus rally into next week since we're ending the week with a positive momentum. We'll see how next week ends up, but I think you're right. The key word is volatility, and we might have that over the next couple of weeks with more people being out on vacation or spending time with family and not observing the markets as much. I don't know that you can say that necessarily for institutional investors, but definitely the retail investors probably going to be out of the game for the next couple of weeks.
I think some jobs updates goes well with the inflation report. So job market has been pretty cold still. It's not drastic, not bad, but still not getting to that 4.0 level we want. I think it's around 4.6.
Just recently ticked up to 4.6.
Mm-hmm.
So that combined with the inflation news has triggered investors to start pricing in earlier rate cuts. And we might even start seeing something around March if the Fed is feeling generous.
I think that's kind of been part of the main narrative over the last couple of months is we had delayed data, right, because of the government shutdown. But then the inflation news that you mentioned was interesting because this week core inflation came in quite a bit lower than expected. Usually there's not that big of a gap. I think it was something like 0.4%. And it was funny because the day that we saw that and we were talking about it, Gilbert was like, I don't buy it. The next morning on Bloomberg, the first headline I saw was like something about doubts creep in about the credibility of the CPI data or and so it's interesting to watch that and see kind of how the markets digest that. But yes, softer inflation on its way to 2%. Most recently, in the back end of the summer months leading into the fall, inflation was actually ticking back up towards 3%, which is not good. The Fed's target is 2%. That dual mandate, and you hit on this, Zach, it's 2% inflation is the target, is the goal, and 4% roughly unemployment, which is considered full employment. The unemployment rate has ticked up a little bit. 4.6 is the highest level that we've seen since the Fed started raising interest rates about a year and a half ago. I guess it's going on 2 years now. So we're in an interesting spot. People have been holding their breath investors have been holding their breath for at least a year and a half, if not 2 years. Bracing for a recession has not materialized. I saw a guy this morning. Yet. It definitely will. We all know that. Markets go through cycles. So it's going to happen at some point. But I saw a guy on Bloomberg this morning. I think he was from B of A. And he was saying that neither one of those they were too scared of going into next year. They said, yeah, we maybe a slight risk of recession, maybe a slight risk of some elevated services sector sticky inflation, but nothing that they were really too concerned about one way or the other. So does this mean we're in like this Goldilocks period?
Well, and even you and I, when we talked about a recession a year and a half ago, we talked about how our feeling was that if we did have one, it was going to be short and shallow. So not real entrenched, not real long lasting, short and shallow. So I think the market is probably pricing a similar reaction or a similar response to a recession, short and shallow.
And I know that we talk about that a lot on here, but I think it's important to point out, and I mentioned this to you guys earlier today, because a lot of times when people say recession or something, inflation, whatever it is about the economy, I think investors like to lean towards trying to maybe time the market. But there are some extremely bold statistics that say that is next to impossible to do across the board. Doesn't matter how educated you are, whether you're a CFA, you work on Wall Street, you're an institutional investor, whatever, it's next to impossible to do. So for the retail investor, some of the times the best thing to do is just stay put, but also tie whatever your investing goals are to a long-term investing plan. And I think that's the key. So this morning, I saw there was a lady from BNY Wealth, Bank of New York Wealth, on Bloomberg speaking. And we all know the chart that roughly shows the last 25 years. We all have it. It's from all the investment companies, all the Wall Street firms have a piece on it, a visual piece, but it's, if you miss the best 10 individual days over the last 25 years, call it in the S&P, your returns actually almost get severed in half. So your returns almost double if you would have just stayed in for those 10 individual days. And so that's a really powerful statistic.
And when do those 10 best days usually happen?
Usually right after one of the worst days, right?
Exactly.
Right. But no one ever knows when that's going to occur. So if you're trying to time the market and you're like, I'm not sure things are good right now, and you get out and you uninvest yourself, you increase the chances that you're going to miss one of those days, and you just don't know when they're going to come. So what about this year? This was the stat that stood out to me that she was talking about this morning, was that just in 2025, if you miss the 10 best individual days in the market in 2025, your cumulative annualized return for 2025 is negative 12%. The stock markets across the board, S&P 500 in this case, is up somewhere in the teens, 15%-ish year to date. If you miss the best 10 days, you're down 12%. That is a 29% difference in return. And in our world, in investing terms, that is a huge gap. So if you were worried about policies, Trump's tariffs, geopolitical issues, inflation, the economic backdrop, recession, whatever it is, and you tried to time the market and you missed those 10 best days, you really shot yourself in the foot. But if you covered your eyes and said, I'm going to stick to my long-term plan, which probably said, all things being equal, don't get out of the market, don't try to time the market, you had a fairly nice positive return. And I think that's important to point out, because
for the third year in a row on average.
Yeah, for the third year in a row, which is kind of a little wonky. It doesn't fit a lot of historical patterns, but that ties in human psychology to long-term investing, I think, better than any other statistic or any other piece out there, where you can look at that and say, this is a drastic difference between what would have happened if I would have just stuck to a long-term plan and stayed invested, versus actually trying to time the market and maybe shooting myself in the foot and missing those 10 best individual days. But that's what we're here for. And we always like to remind people that that's what we do as advisors. A lot of times it's just, there is so much value in having a conversation that we think that sometimes that's all it takes to kind of reassure someone that you're still on track for your long-term plan. A lot of times the goals that you have, long-term goals that are tied back to investing, don't necessarily tie into short-term market swings. Most of the time they don't.
Right. Most of it's noise.
It is. Most of it is noise, but
including us and our show that we talk about what happened in the past week.
But yes,
it's a lot of noise.
But that's what we try to do, is boil all of it down so it's not so noisy. And you can say, listen, there's a lot happening on Fox News and CNN. There always is. But if you come talk to us, we can help explain or point out maybe what's relevant for you and applicable to you, that you're hearing on social media platforms or in Fox News or whatever it is, and what's not. Because some of it may be applicable to you in your long-term plan, but that's what we're here to do, is to help you sort out what is and what isn't. But we can all tell you that about 90% of the time, most of what's out there is.
Speaking of human psychology.
Yeah. What you got?
When you're spending time with your family over the holidays, if you so choose to do that,
psych them out.
Wouldn't it be great if you could share some good news with them?
Yeah, it would be.
It would be. And we have two good ideas here that I think you might want to consider sharing with your family while you're with them over the holiday season. Have you guys ever heard of unclaimed property?
My answer is yes.
Excellent. Yes,
but you and I have talked about this a bunch. But what about you, Zach? Have you heard of that? You know what that is?
I think faintly, but I'm not too sure. What do you mean by it?
All right. Well, in the state of Texas, and this is not just the state of Texas, it's every state, I believe. When you have a financial account, a check, a bank account, some type of financial instrument, and you can't be located what do you think happens to the money? Do you think the issuer of the check just gets to keep it, or the bank deposit that you had, they just get to keep it? No, they are forced in most states to turn over the money to, in this case in Texas, the comptroller of Texas.
Which is a really weird word called
Comptroller, yes.
Well, I'm talking about escheatment.
Yes. The process is called escheatment, which means that the holder of these funds cannot locate the owner, and they can't keep the money, so they have to turn it over to someone else to manage it for you while you're being located. In this case, Texas is called the Comptroller of Public Accounts. Now, the comptroller in Texas does a bunch of stuff. They collect sales taxes and they do a lot of tax filings for businesses and what have you. But in one of their
they actually
other jobs,
do a lot of really weird things that
yes,
you wouldn't think they do.
They do. But one of the things they primarily do, which is I think applicable to most people, is they manage unclaimed property in Texas. So if you go to the website for the state of Texas and the comptroller of the state of Texas, they maintain a website called the Unclaimed Property website. You'd be shocked and surprised about how many people are out there and how much money is out there. Now, if you do find your name out there, whether it's your name, your friends, your family, and frankly, you can find anybody just out there if you have their name, you can go through the process. You have to print out a form. You have to file some documents. You have to make copies and prove that you are the person on this entry. You can receive a check from the comptroller of the state of Texas for your unclaimed property.
It's claimit.gov. Claimittexas.gov. I just put it at the bottom.
Claimittexas.gov. Yeah. Yes. So go to that website, share it with all your family, and say, hey, check. What most people would say, well, how in the heck could you lose any money? Well, or lose track of your financial accounts? Well, if you move, so deposits on apartments, deposits with utility companies. If you have a small bank account when you were younger and you moved and they lost your address or didn't have your correct address, all kinds of weird things, car insurance policies, life insurance policies, various things that are out there that the state of Texas becomes the owner of because the holder of that original account can't find you. And, I think I've seen claims range from anywhere from just a few dollars to tens of thousands of dollars. I'll tell the story of one of my customers in Bandera, Texas, that I met with years ago. He had written 3 cashier's checks for $10,000 each. $10,000 each. And for whatever reason, they were never cashed. And we found his name on the Unclaimed Property website. I'm not going to show you the name of the person because they've long since passed, but still, I think for privacy purposes, they were able to claim $30,000 from the state of Texas. This is a true, actual story. Now, 99.99% of the people are not going to have $30,000. You might be lucky to have a few bucks, if any.
I found the first time I did it, I found a few $100. I don't even remember what it was from, but it was like $300, which, hey man, that made my day that day.
You visited this morning with a gentleman from one of our vendors who told us about the Department of Labor. The Department of Labor is a federal government agency that manages or supervises 401k issuers. And they have a website now where you, an individual, can go to their website, register with some details. You have to take a photo of your face and
you have to do some verifications.
You have to do some verification steps. But once you do that, you can register for their website and see if you have any old 401k money sitting out there somewhere with a former employer.
And I'll give you an example that this was not my example. I did not verify it. It was word of mouth, but it went something like this. This gentleman was at another get together with some other advisors. There were some clients in the audience. There were 4 of them that found old 401ks. And what I can tell you is that whatever the dollar amount used to be, these were so old that it had been invested and stayed invested for like 25 to 35 years. So it was significantly more than whatever it was back when they, stopped contributing to it and moved on with their life in another direction. The actual website is lost and found, spelled out .dol.gov. That's it.
Yep. Government website. It's a government website.
Yes.
So it's not our website or some scam
This
website.
is all public information, government websites. Yeah, this doesn't have anything to do with us. This is all public information. I had to upload or take a picture of my driver's license, picture of my face, like you mentioned. So it was a little bit of that, but it's worth checking.
Share those two things.
If you do find something that's an orphan 401k account, the next follow-up question is going to be like, okay, well, what do I do next? At that point, you can call us. We'd be happy. We'd be happy to help you do that. But you can hit us up anyway. I'd be happy to try to point you in the right direction as far as like what to do, how to get to the website, what to do to get through all that.
Yes.
Did you find some money over there or what?
Unfortunately for me, I did not find any, but
Okay.
I did find my brother on there.
Oh.
Braden, you have $40.67 waiting for you.
Shout out.
Shout out to Braden, right?
That's what's
Yeah.
up,
Okay.
man.
All right. Well, what you need to do is go home and tell him, hey, for $20, I'll show you how to get $20.
There we go.
That's hilarious. Okay, well, before we wind it down, parting thoughts, comments, insults. You guys got anything for us before we leave for the weekend?
I'm excited about the end of 2025. 2025 has been hard on all of us in many ways, shapes, and forms. The city of Kerrville the Kerr County in particular has experienced some pretty devastating flooding in the summer. We're recovering slowly but surely. I know a lot of family and friends that have had a really, really tough year. But I would submit to you that, we always talk about stocks and bonds, mutual funds, and investing for the future and saving, all these good things. All that stuff is important for sure. But I think the most important investment you can make is in yourself, in your relationships, in the people that matter to you, because those types of investments you can't put a price on. You can't. They're priceless, really. And I would say to everybody, in spite of all the kicks in the shins that we've gotten this year and slaps and beatdowns that we've gotten, get back up, dust yourself off, and move forward. And if you need help, ask for it. Lean on the people that you care about. Lean on your family, your friends, and the other people that love you and care about you. There are people out there that do care about you and love you. Do that and move forward. And 2026 is probably going to have its own little kicks in the pants too. But I think like 2025, we can all make it through if we support each other. So if you need some support, I'm here. I'll be your friend. I'll talk to you. And of course, I mean that to you guys personally, but to anybody else out there, reach out, ask for help. There's no shame in asking for help. You will find somebody that cares. It might be tough, but you'll find somebody that cares. Because I know that us as financial advisors, we care about our customers, our friends, our family. So chin up, dust yourself off, and move forward. You got this.
Cue the Rocky music. Probably some copyright laws there that I cannot do that.
.gov.
Claim it. Claim it Texas.
Claim it Texas.
Claim it Texas.gov
Yes.
and lostandfound.dol.gov. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.